So a quick recap of what we have seen with markets so far. Certainly we do recall from last week that we've seen a broad rise for global equity markets, and that had been due to the fact that the market is expecting the accommodative situation for markets to extend with a less aggressive interest rate hike path expected from the Federal Reserve. And for the US markets at the start of this week, certainly we are seeing prices pretty much elevated as well. Although there was some concerns with regards to the healthcare sector, as we did hear from two members of the Senate, Republican representatives themselves will express that they will dissent the vote with regards to healthcare reform. And for markets itself, once again, that triggered more concerns of how this could actually create wider concerns on the passing of many of the policies we are expecting from the new US administration. So the healthcare sector itself is down 0.26% on a week-to-date basis in the S&P 500 index. But on the flip side, we are seeing quite a bit of boost for the IT sector with the softer US dollar, and that had really transpired to the rest of Asia as well, as we did see the MSCI Asia Pacific Index itself touching a new high since 2007 on Tuesday itself. So really looking to the rest of this week, where exactly are some of our trading opportunities? I would say that although there was a lot of focus on the equity markets, I do think that the movements itself may really be captured by what's happening in the currency market instead. So the focus on monetary policy is going to continue into the next half of this week, and we have the ECB and also the Bank of Japan meeting that's set to unfold on Thursday. So with the Bank of Japan meeting, the market is not expecting too much changes over there, so I don't think that the movements itself is going to capture our attention, but instead look to the ECB instead. So I would say that looking at the Euro US dollar, we've seen prices itself shoot up above the 1.15 psychological level in the past few sessions, and this strong movements, but really to a large extent the reason why we've seen this really came from the US dollar, as the dollar index itself continuously been slumping since the previous week on account of the Fed expectations. So with regards to that currency pair, I would see some resistance up ahead, currently at around the 1.1158 level. And the ECB meeting will be key to see if we're going to see this current level being beat at this current moment. So with the lack of leads coming from the Fed, given that we have the Fed FOMC meeting coming through next week, a lot of the market attention will be on how the euro itself will lead. And as things stand, we do not expect ECB President Mario Draghi to really deviate too far from his current hawkish stance, but he may be seeing little incentives to go on the overtly hawkish end. So watch for if we could see a break on that side, and meanwhile the support itself can be found around 1.1147 level. Another key theme that we've really seen since the start of this week is the Aussie dollar. So we've seen the Aussie dollar really shooting through the roof, being one of the strong star performers in the Asia Pacific region for the matter. And looking at the triggers itself, we've seen some of this high demand for iron prices actually helping to drive the Aussie US dollar. So some of the market itself is expecting that Aussie dollar could even see the 0.80 level into the end of this week. And with the employment data that is going to come through that on Thursday's session, we've seen three previous releases themselves really beating the market's expectation. The current Bloomberg's median consensus at a 5K addition certainly doesn't seem like one that may be difficult to beat, so watch for a break through that level, and meanwhile the support itself can be found around 0.7760 level. Also, we do recall on Tuesday that we have seen the RBA minutes that had been on the hawkish end. So for the markets, some of these speakers who are going to come out to clarify from the RBA should also be watched as well, for if they are going to sustain their hawkish tone as well.